Good evening, everybody. This is Michael Filigara, and I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 future, the ES, on Monday, April 19th, 2021. We left off yesterday by I presented our long-term count, or our big picture count. And that big picture, starting at the very top, is and tracing out a five-wave cycle degree advance. And this began off of the 1974 lows. So this is how long this particular phase in the market has been involved in a bull market run. Now, this has included a very large decline that we saw in 2000 to 2009, and the 1987 crash, and the meltdown after the pandemic began and we went into shutdown. So every time we thought that the end of the world was near, it was not within the particular count. And so where we stand now is in a cycle wave 5. And that began off of the March lows in 2009. So what is within a 5-wave cycle degree, so within cycle wave 5, it will consist of 5 waves of primary degree, and then there will be 5 waves of minor degree. And each one of those advances, so waves 1, 3, and 5, will each consist of their own 5 waves. Wave 3, as a matter of fact, subdivided twice. And actually more than that, if we had to go in within, it would be like 3 or 4 times it subdivided in each of its own third waves to complete the minor third wave. Now, within the primary degree count, we have finished waves 1, 2, 3, and 4. Now from there, we're in a primary 5th wave up. And within that primary 5th wave up, excuse me, we have finished intermediate waves 1 and 2 and are in the end stages of intermediate wave 3. So we're looking for intermediate wave 3 to complete pretty much in the areas that we have been trading in, possibly a little higher. Excuse me. So I'm going to bring this down to the hourly chart so we can see where we are. We're counting the internal waves for the minor third wave. So we're in that 5th wave to complete the minor third. Now, it is possible to call it complete here. I could put a 5 there, put the 3 above it, and then put it would be the intermediate 3 above it. And then the ensuing corrective phase that would follow would be an intermediate wave 4. And on that respect, we would be looking for that wave 4 to drop down to the 4th wave of one lesser degree, and that's down here. So we would be looking for a much larger correction than what we have seen thus far. Now let me go back to that hourly chart, because what this could be is, again, the 5th wave of the minor wave 5 is also now subdividing. And this could just be a subminuet first wave. This is the 2nd wave. And now we're going to get a 3rd, a 4th, and a 5th to complete wave 3, and then another decline and another rally to complete this intermediate 3rd wave. Now, what's going to tell us what is really in force? Because we really have to give credence and allow both counts. We have to allow for one that goes up, and we have to allow for the one that may take us back down below this chart. So at least down into here and lower. So under the count that this is the endpoint, we would be looking at a fourth wave correction. And let's just go back to the daily chart. And it would be a fairly large fourth wave correction because this would be 1, 2, 3, 4, 5. It would complete minor 5. It would complete intermediate wave 3. Okay. So what we would then be looking for is a corrective phase that would take in the following move. Please cooperate. Thank you. And if we're saying that this was it here, that's 483.50. We're going to get it, nail it right there with 50 cents off. We would be looking for 3,700, and that's just below that zone. So I'm definitely looking for something between 0.236 and 0.382. And in all reality, the only thing it can't do is overlap down there at 32.31. So it has a lot of ground where it could play and it could correct and it could just mess around. But anticipation and the expectation of when that is complete, that we're going to again move higher. Now, is the market really set up to do that type of correction right now? Oh, yes. If it's going to happen, it's going to happen. We saw that the markets really recovered today, but they began to sell off of the highs that they made last week. So yeah, everything is possible. And we just have to allow the market to tell us what is what. Now, conversely, if indeed this was just wave 1 and we're looking for wave 2, now we're going to run a little bit different Fibonacci. Now we're going to just run it from the bottom or the start of wave 1 up to the top of wave 1. Now it has come down. Let's just drop this down to 30 so I can see this a little bit cleanly. It has dropped down almost to 0.618. Clearly within the realm of reality and clearly within what can happen. In fact, this wave can actually come all the way down to 4,111, excuse me, or 4,112. So that zone. But right now, it looks to have completed an ABC down, getting to 618, and it's turning higher. But from what I can see, at least on the 30-minute chart, this kind of looks like an ABC. So there's a whole nother possibility that we could do a double ABC. There's all kinds of corrective phases that can happen. And we have to allow the market to tell us. But it's good to have an idea of what's going on and have points where if they start to break, that's going to be more pointing towards a particular view that we're taking right now. So if this comes back down and breaks first to below that, where it was, like that's 4,141 or 142, then it's likely going to be in a additional ABC down, at least, and we're now looking at these lower levels down into here and possibly closer to 4,112. Now, as I stated yesterday as well, if we're going to count that as 1 and this is 2, then this start of this wave, it's off to a good start. Don't get me wrong, but I'm not looking for it to really start to pull back and come back below these levels. So let's basically say 4,155 or down to 150. We'll give it down to 150. That's where I would expect it to hold. Starting to break below that, we're going to go to these lower levels. Now, if it continues to hold, maybe pulls back a little bit and then continues higher, we're looking for it to break 41.66. And eventually, without too much hesitation, I'm looking for it to break 41.83. That remains the same. So that's what our setup is for tomorrow. Right now, we have to allow for continued decline. We've got our break points. It would give us a stronger signal that we're going to go down further, at least to the 200-day moving average, and this is on a 30-minute chart, and most likely down here. So yes, we still have room for 30 points of downside, but we also have room for 20 points of upside. Now we're to new highs, put in a little bit of correction, and boom, we're back in the races to finish a larger third wave. And in that case, we would then, one more draw that I'm going to do for us is to go ahead and undo Fibonacci retracements. Yeah, is to go ahead and go back up and put the other Fibonacci's on that would help us determine how high this all can go. So I'm going to use extensions, Fibonacci extensions, and I'm going to take it again because we're going to compare it, we're going to compare it to the third wave. We're looking for the completion of the fifth. The fifth compares to the third in this case because of position. So we're going to go here and to get this third. Yes. And then down here, and this may not be exact because I'm not sure where that all came in. But what we're looking for is for it to break above what we saw, which is 83.50. Then we have 4,238, 4,279 or 4,300. That's actually the particular favorite for quite a few people. But if this is the third wave, it's not, it's going to pause there. I think it would pause there because of, well, if we put a 5 there and this is a 2, and that was 1, excuse me, then we can pull this down and start relating it to the previous waves that we've had. And we'll see where 3 could come in. But I would expect likely at least 4,300, 4,300. But definitively, I would expect 4,200, at least 4,238. That likely would be acceptable for the third. But you know, when the first is here, 41.21 to 41.83. So that's 60. So it's got to be at least 60. Now I'd be taking it off of that bottom. So you're up to 42. But I'm expecting more. And that would be 3 is equal to 1, and 3 should be like 1.68 times 1. So, you know, if we're looking at that, which would be like 100 points. So we're here again. Now we're up into that 42.38 area. So yeah, that would be a good place for it to finish, and then put in an additional fourth wave correction, and then one more new high, likely up to that 4,300. That then is going to complete this intermediate wave 3 and set the stage for that fourth wave correction. And that really fits the whole what we're in, where we're going, how we've been, what support's coming in underneath. So everything fits more for it to get to 4,300 before we really start to see a stronger correction. And that's what we're going to leave it for tonight. For tomorrow, we've got our walking papers. Continue to use your Fibonacci and your moving averages. So on your day trading screens, the highest I go really, I will look at the hourly, but it's going to be like your 15-minute, which gives you a pretty good idea of the size of rallies and the sizes of declines. And so you know that they're tradable. And that's also important. And you'll be able to count these individual internals to get an idea of what's going on. So run Fibonacci's. You can run Fibonacci's from here to here. You can run Fibonacci's from here to here. And so you're working out your downside and your upsides all in one. So our next update will be tomorrow.